So in this video, what I'm going to be talking about is particularly on multiple time frames. Now, I'm going to show you my screen right now, and what we're going to do is we're going to talk about a couple of things. Okay, first we're going to start talking about how do you use multiple time frames to your best interest. Second, I'm going to be talking about a trade that I'm going to show you right now. Let me share my screen, and let me do it this way. Let me know if my screen is visible. So one, I'm going to be talking about your multiple time frame analysis. How do you use it? What does it even mean? Second, I want to talk to you about this particular trade that I'm particularly eyeing. I'll explain to you why I'm eyeing this and how it can work or how it can go wrong. I'll explain that. We have NFP today, so in approximately 25 minutes time, NFP is also going to release. So we're going to talk about all of these things and make sure that I can at least give you some tips and tricks on that you can use immediately by the end of this webinar. So we'll space it out to make sure that you have all the necessary elements that you need. I'll try to talk about it in a step-by-step format so that way you know exactly what needs to be done from the beginning to the middle to the end. Yeah? So this will work for any technique that you're using, any markets that you use, whether you're trading using your indicators, whether you're trading urban Forex style, whether you're trading in your own system or methodology, or you're trading crypto, Forex, or stocks. So this can be universally applied. As long as there's human beings on the counterparty, this can easily be applied. Okay? All right, so let's begin. Let's begin. Okay. All right, so what we have in front of us is Aussie USD. Okay. Now, I've chosen this Aussie USD. This is a particular position I'm currently in. So I want to, we can open that up and look at that as well. But the question comes in is, do I buy? Do I sell because it's a downtrend? Do I change the time frame and saying, oh, but I'm at resistance, I should be selling? Or, oh no, I'm in an uptrend, I should be buying? Or should I go even a higher time frame and say, oh, but technically I'm at a 50% discount, so I should be selling, not buying? Or should I go up even one time frame higher and saying, oh, actually the sells are not working, so it should be a buy now because the sells failed, 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 and then it probed the bottom. Look at the volume. You see, no matter what kind of analysis you throw at the market, generally the market will try to support you and saying there is a time frame that matches the way you think. Okay, so does that mean a time frame analysis is important? Does that mean a time frame analysis will solve your problems? Have you ever thought for a moment and saying, Naveen, what's the best time frame to trade from? If I want to make money every day, what's the time frame I should be trading? Should I be looking at the daily? Should I be looking at the 60-minute charts? I want to trade every day. Should I be looking at the 15 minutes? So let's first clear the myth of some of these things, okay? All right, let's start to clear some of these myths. So let's take a look at this on what's the current price right now, if you guys know how to do this. What's the current price right now? This 0.6639. That's the current price. If I go to the weekly, is that price the same? Absolutely. If I go down to the 1 minute, is that price the same? Absolutely. Huh. So I change any time frame I want, it's the same price? Yeah. It's just you're choosing to look at that price in different variations. Just like an indicator is a way to look at the market in different variations. Just like your trading strategy is looking at the market in different variations. So everyone is choosing to look at the market in very different variations. So let's start with a particular example, okay? Let's start with a particular example. Let me turn off my screen sharing for a moment, and I need to see how I can do that. Okay. Here. Let me ask you guys a question first. Okay, let's take a example of a tsunami. Okay, this is an example I was giving earlier today. If there is a tsunami coming, what is a tsunami? It's this massive tidal wave that does a lot of damage, right? So perhaps a earthquake can happen first, monthly chart. That causes a ripple effect that makes a tsunami generate, right? Which could be weekly time frame. Then you see water receding from the beach line, water going back from the beach, daily chart, 4-hour chart. Then you can see birds flying away, 60-minute chart. Okay, all of these things that are happening, it's saying the same thing. Tsunami is coming, right? It's saying the same thing. All of those things is saying the same thing. But some people say, did you see the birds? It must be a tsunami. Now, can you use that excuse every single time? Every time you see a bird flying, is it a tsunami coming? Right? If every time a wave comes to the beach and the wave moves back, is it a tsunami coming? Right. So you can't use it as a one-off thing. You have to look at the markets not in the way you choose and desire, but for what it's telling you as a whole. What it's telling you as a whole. So if you understand that a little bit, then multi-time frame analysis becomes a weapon, not a crutch. Okay? Because if you change enough time frames, it will either agree with you, and if you change the time frame again, it will disagree with you. So that's going to be a dilemma constantly. So if you say, ooh, I'm a trend pullback trader, and you see a trend that says get ready to do a sell, okay? Let me go back to my screens here so I can show you. So if you see a trend and then it's telling you get ready to do a buy, for example, right now. Okay, so oh wow, look at that trend. I'm a trend pullback trader. When the price comes in, I'd like to do a buy. Okay, I change the time frame. Trend pullback guy says, oh, look at this trend coming down. If it pulls back, we're going to sell. Why are we buying? It looks like a sell. Okay, if I change the time frame again to this, okay, this is going up and this is the pullback and it's supposed to be a buy again. If you look for it, you'll find whatever your nonsense you're trying to apply to the market. It will do that. But me saying, should I buy? Should I sell? I am looking for something with no meaning. I'm looking for something with no meaning, right? So one of the first things to understand is what is the meaning behind what you're trying to do? Okay? When someone tells you, hey, you know, when you see this price right here, this cluster right here, and that cluster's got a supply, it's got a demand, it's got a this, it's got a that, and you got to draw a line like this, and then when it comes down to here and it's 50% discount and this and this and this, then you do this. Why? Why? Why must I do that? What does it mean to do that? Why should it work? So these are important questions to ask. You don't need to ask the person teaching you this in case they don't know how to explain it or they say, oh, you have a psychological problem. Right? That's the traditional answer. When they cannot explain it, it's your psychology that's an issue. Okay. Or you need to get an explanation or think for yourself to be like, why do you think it needs to be that way? Okay. So you start to begin to answer this question of what makes the market move? What makes the market move? And all of you guys know this answer, right? Oh, it's the banks, the institutions, and all these big companies, hedge funds. These are the people who move the market. Everybody has repeated that sentence to me for the last 10, 20 years. Okay, whoever I asked this question to, they answer the same thing. What is this answer coming from? From a vocabulary that they've memorized, from a sentence that they've memorized. What does it mean? Nobody knows. Okay, so what does it mean when they say, oh, there's so many players in the market? Okay, what about traders? Oh, there's so many traders in the market. Retail traders. Oh, there's so many retail traders in the market. Institutional traders. Oh, there's a lot of those as well. Okay, so then what is our job? I know what a hedge fund does. I know what companies do. I know what the government's doing, why they use the markets. Can you tell me, you as a trader, why do you use the market? Where's your benefit? What service do you need to provide by coming to this market and clicking this red button or this blue button, and you're getting paid to do what? What is it that you are providing in this market, and why should you get paid? Because everything else in your life, you've always gotten paid in exchange for your time or a product or a service. That's the only way you've known your entire life to get paid. But in this market, you don't treat it that way. When you enter this market, you look at this as if I draw a line, I should get paid. Sounds a little silly, right, when we put it that way? Okay, and it should sound silly because if it sounds silly, we can face it, acknowledge it, and come out the other side. It took me 7 years to face it. Hopefully, I can do this for you guys in the next 7 minutes. Okay, so we want to learn how to get you to the other side. Now, there's two main players. Let's separate the different types of players. Let's make them into two pieces. Okay, there's player A and there's player B. Okay, player A and player B. Let's call all of you guys player B in this room. Everyone who's in this chat, you're player B, okay? And there's player A. Player A are the real meat and bones of the economy. They're the people who make stuff happen, okay? Which means you want an iPhone in your hand, someone's got to produce it. And when they produce it out in China or India and they ship it across the world and they make sales of it, and then that money needs to flow back to the US or to the Netherlands or wherever it needs to flow back to, it must enter this system of foreign exchange to bring it back to a different currency. So they're not looking for lines and this and that. They're looking for when is the right time for us to convert our sales back to our home country, because we want to show our profits there so we can pay less taxes. Doesn't matter what they do with it. That's why they need to do it. That's their why they're entering this market. So there's tons of those players who have a reason. Let's say we're looking at this Aussie USD, right? Now, if Aussie USD keeps going up, 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 that means your Australian dollar is getting stronger. On the contrary, your US dollar is getting weaker. So if you have a lot of Australian dollars in savings and you realize, if I can buy a house in the US in US dollars, where right now the economy is getting really bad and all the situations with all the issues that are happening that we see on Instagram and reels and stabbings and like robbery and theft, and it's just becoming not the US like it used to be 20 years ago. And all this you're thinking and you're like, well, that's an opportunity for me. If I can buy things for dirt cheap, obviously US is not going to stay like that. They'll come through it as they always do, and they'll come out on the other side stronger and better than before. When that situation happens, the house that you bought will go up in value. So you're like, I want this thing to keep going up so you can buy the house. That is you using foreign exchange for a real purpose. That's why you need it. So all those people who need it for a real purpose are player A. They're not interested in something called a stop loss. They're not interested in something that says, it went down 20 pips, I'm dead. They're not interested in that. They're interested in, I'm in here, I'm going there. They're not sensitive to anything. They're sensitive to price. They're not sensitive to stop loss. They're not sensitive to time as much. They are sensitive to price. Let's break it down to player B. Player B is basically saying, I don't really care who these guys are on player A. I really don't care what they want. I'm interested in is, where's the movement? Oh, this thing is going up. Looks like a lot of people want this. What if I can get my hands on this and I can sell it to them who really want it? Okay, I can sell it to them who really want it. That, my friend, is your service that you provide. And that's how you get paid. If they don't want it and you're trying to buy this and shove it down their throat and say, you have to buy this, I have to sell to you, they're going to say, why? I don't really want it. You have to buy this. Why? Oh, because I drew a trend line and the trend line broke. You must buy it. Why? Right? It's gonna sound so illogical when you're doing this transaction that by the time you're done explaining it, saying, yeah, but it's a 50% discount. I bought it here. Fibonacci told me to. So I need to sell it to you at this price. And they're gonna be like, but I don't want it. Okay? So let's get one thing straight in our minds. Doing things just out of pure technical analysis is not really going to help anybody. You got to understand what his needs and wants are, and then you service that needs and want, and in exchange, you get paid for it. That I didn't know for 7 long damn years. And I was stuck in the cycle of indicators and strategies, indicators and strategies. How many of you in this room can understand that cycle and relate that you've been in that cycle? I spent so much time in that cycle. It's disheartening to even talk about it all the time, but I had to accept it that I went through that pain. I was a loser during that time, but it's okay. That was my rite of passage, if you want to put it that way. But I was an idiot for 7 years, and that's okay. And that's okay. But you gotta have that humility to accept, throw it away, move forward. You gotta have that humility to say, I'm there, my friend. It's time to get rid of it. I've been trying it for too many days, right? Good. I see a lot of you guys are saying that. So it's a pain point for many of us, right? It's a pain point for many of us because we're just doing things just to do things and hoping that today would be different. Why should today be different? We're not doing anything different. We're doing the same thing again and again and again and again. Why should we get paid? Every now and then we are right. It happens to be that we are right and we get paid and we're like, whoa, I can be a trader because I was right today. And then we realize the next day that's not the case, right? Okay, so once we internalize this, we can move past this. Okay, so let's now begin with understanding what are all the situations that we need to be facing. So first things first is let's buckle down the logic. Okay, everybody so far is with me on what makes a trader B make money, right? I just broke it down into 2 simplistic things. Somebody who really wants the product, and you don't really care what the product is. You're like, I don't care. I trade anything, baby. Right? You're interested in how can I trade something that's moving, so when it moves, you can get rid of it for a higher price, and then you make the difference. And that's how you get paid. That's your difference. You're in business, right? You're in business. You're buying low, selling high. People stop that sentence right there. Buy low, sell high. Don't stop that sentence. Finish it. Buy low, sell high of something that a person wants. Don't buy low, sell high of something nobody wants. Okay, remember that. Finish that whole sentence. That sentence is partial. Okay? All right. Now, let's take a step a little bit further now. Okay? Now, let's talk about multiple time frames. Now that you guys know that pricing is the important factor, it's not the time frame that makes it important. Okay, if pricing is important. Now, the next thing is to understand from those 2 players, right? Let's classify you. Okay, let's classify you. This guy, trader A, is the risk taker. Okay, risk taker. Remember when I said if you wanted to buy a house in US? Sorry, not a risk trader, a risk taker. So what this basically means is the risk taker is basically saying profit or loss, it's on me. I am willing to take the chance. Trader B is saying, I don't really care what you want, my friend. Give me my commission. I will help get it for you. I will help you get whatever risk you want to take. You want to buy Aussie? Let me get it for you. I need my commission. You want to buy CAD? Let me get it for you. I'll give you, just give me my commission. That's what these guys are doing. So you guys, I don't want to use the word seller. I'm going to remove the word seller. I'm going to call you guys vendors. You guys are the store. Okay, you guys are the store. You guys are the vendor. Okay, you are selling the service like Wall Street. Wall Street is not interested what you want to buy and take a risk on. Wall Street's like, you buy whatever you want. I will fill your order. Pay me my spread. So far, so good? Making sense? So if you act as a vendor, then now you're providing a service. And now you can position yourself in the market with that logic and things will be very different. Okay. Now, let's talk about this in a very, very, very unique way. Ready? Here we go. Take a look at this. If prices move upwards, okay, and then you all know, oh my God, it's going. I'm going to give you a little thing to watch out for. It's going, right? Everyone's looking at that. Oh, it's going, it's going, it's going up. It's going up. I should do something. Prices sharply come down. Okay, what happens is everyone that's looking at this thing is going to pause. Everyone who's looking at thing is going to pause and saying, wait, sellers are coming in hot. This part we refer to as the chasers. The people who love to take the chance and say, I'm going to sell it. I'm going to sell it. I don't care. I'm going to sell it. Okay, this looks like it's the top. It can't go up forever. I'm going to sell it. Okay. These prices that are going up, they're going up because they want something. They want something badly, but they cannot get it. This is very important. Okay. Everybody thinks this is a buyer buying it up. No, this is a buyer cannot get what he wants. It cannot get what he wants. That means all of us, we go to the store says, I have 5 of these things, whatever that thing is. There's only 5, and there's hundreds of us standing in line. The thing is $1. Suddenly, one of you guys say, I'll give you $5. The next guy says, I'll give you this. The next guy says, I'll give you that. The next guy says, I'll give you that. But none of us got it. The price went up so quickly, but not one of us got filled. Does that make sense? Does everyone understand me? Okay, looks like NFP is released as well. We'll talk about this in a little bit as well, and we'll go through it in a little while. Yeah, there's a lot of news actually right at this current moment. I'll in fact open up this market countdown app that we have. It's a free app, and you'll see. So average hourly earnings has released, building permits have released, export price, housing starts, import price index, NFP, participation rate, retail control, retail sales, unemployment, and then the next news is an hour, 15 minutes later. So if I put my mouse on it, I can see my local time, but otherwise it tells me how many minutes and hours to go. Okay, so we're 31 minutes into New York, and it's 8:31 in New York right now. So market's just open. All right. Okay, some of you guys were probably copying me on Aussie USD. That's fine. Let's if you're in this trade with me and you're booking it, you're locking in the profits, great. What I'm more interested in is, do you understand what we're talking about? Also in this webinar, I'll open up my cell phone so I can show you my position that I have running on this as well. Okay. Let me see if I have it running right now. I can just give you guys a glimpse, and then I'm going to talk about multi-time frame analysis a little bit. And what we'll do as a quiz, just to make it fun for you guys, is I'm going to make you guys explain it back to me on why do you think I did Aussie USD. Does that sound good? Shall we do it that way? Because I want to see if what I explain to you over the next 15, 20 minutes, you understand it enough so you can explain it back to me, reverse engineer it, and be like, is that how he did Aussie USD? Can I understand it? If you can understand it, the logic is starting to kick in, and that's what we're interested in. Okay, and that's what we're interested in. Okay, so let me open up this thing on my phone. All right, so this is the position that's running. Aussie USD. This is, I have this open for 13 standard lots, approximately 1.3 million units. My average price is 35.2. It's exactly this price that you see here. Okay, I'm currently running for $2,886 on this thing. Okay, so I'm still expecting this thing to go a little bit further, but you know, we need to continue with the webinar. We don't want to use this to distract us. It just happens to be that in the webinar we got the NFP together, so it's good we can talk about this live. The position was there prior. I want to talk about every little detail of it around it, so that way you can understand it, and the best part is you can explain it back to me. If you can't explain it back to me, that means I failed in teaching you how to do it. Okay, we need to do this repetition back and forth. One of you guys in the Q&A had told me earlier that, Naveen, I've studied a lot and my education is getting high up there, but I'm a little bit cautious on stepping into the markets. You know, when is the right time to do so? Something along those lines. And I think, you know, if that person is taking education from me, then I have failed. Because one of the things that is important to me is whatever you learn, you gotta use, man. You have to use it. You have to use it. How else will you know what's good, what's not good? How does it work? Does it work for you? Because you should be able to strip away very quickly whatever this guy is explaining. I've tried it for 3 months, doesn't work for me, I'm out. Like, you shouldn't be spending years and years and years confused. You got to be in focus, sharp. You got to understand it, and then build upon it quickly. Okay, all right, so where were we were talking about the vendors, right? We were talking about the vendors. So what we were doing is we're saying everybody is looking at this thing. Oh my God, it's going up, it's going up, it's going up until it goes like this. It goes boom, it comes down hard. Okay. For us, we call this the chasers on the sell side. We call this the chasers, the ones who think it can't go up forever. They're contrarian thinkers. They want to sell everything that goes up. They're looking at it in that format. Then we have the second set of people, which is the smart money. Okay, this is the smart money people, right? They claim for themselves as, I'm pretty smart. I don't chase, I wait. And then I sell. So these guys will start selling here a little bit more. Okay, these guys are here. Okay, no one's catching the top. Just to remind you guys, no one's really catching the top. Most people catch it here or here or here as it's sort of prominent and in your face. Like right now, when this thing flies upwards, right? Like it did right now, many people who waited for the NFP to come, they're gonna have their buy orders right there. They'll get it filled up there, right? Because now it's evident to them what's happening, so they'll buy up there, right? Okay, so if you just keep that in mind, so just think a lot of sell orders are here. A lots of sell is taking place there. Even more people who think they are smart, the smart money, even more orders are now being placed over here. Can all of you guys in this room answer me one question? All these people who are selling, the first group, where is their stop loss? Obviously, it's not going to be here, right? They're going to keep it above something that they've been trained to do, there. Where is this guy's stop loss? It's going to be there. So far, so good? Okay. So what we are interested in doing is we're trying to understand if we understand that player number one, the guy who wants the risk, who wants this thing, we know he wants this badly. Why did price go up from here to here? Can you, that's a pop quiz for you guys. Why did price rise from here to here? What was happening? Okay, quiz for you guys. Answer it back to me, please. Why did price go up? Because they want it badly and nobody is willing to give it to them. So the price is going up, not because they're filled, is because they're unfulfilled. Okay? Remember that. It's extremely important you remember that. A green bars going up doesn't mean they got what they wanted. It's very, very, very important you understand that difference. Many people associate an up move to a buy. Okay? Many people associate an up move to the buy. Okay, it's not a buy, they're not getting filled. Okay, next. So if you work for this guy to provide him a service, what must you do as a vendor? How can you provide him a service? He has just told you, I want this thing so badly, bruh. I want this thing so badly, I cannot get it. And here you are as a trader thinking, and you got this little cape. Okay? You're like, don't worry, I got this. I'm on it. I will find you orders that you can take and continue taking the risk to continue this buy for whatsoever reason that you want. I can care less. Let me help you get your orders. Okay, let me help you get your orders. So what you're interested in is how many orders can I help him? How many? How many can I get for him? Not, ooh, I got him something. Not like that. How many and how much? You want to get maximum. Okay, so when this thing goes down, you tell me, all of you guys here, when you see a chart that's flying up like a rocket and a red bar comes in like that, are all of you guys here selling? Are you guys like, oh my God, we have to sell right now, right now. Sell everything, sell the house, sell the car, sell the grandma, sell everything we need to sell right now. Do you feel antsy? Do you feel like you have anxiety if you don't sell? Does that look like that? It doesn't look like that, right? It doesn't make you do anything. Now, if you slow it down, to give people enough time to think, and then you speed it up again, speed it. Don't go slow, go fast. Go fast and go lower than the previous low. The people, this is human psychology, as they've done with Bitcoin, as they've done with everything. The moment it goes lower low, more and more and more and more and more people will sell. A lot of people will sell. A lot of people will sell. Do you guys agree? Do you guys feel, yeah, if I was watching, I would have done that? Right? Do you guys feel that? Like, oh yeah, I would have done that. Okay, so far so good. I need you guys to stay with me here. Don't get lost in this process. Go slow, watch carefully, take notes. Okay, so we're not interested in the chasers. They don't bring much money to the table. We're trying to grab as many orders as we can. And then we got these smart money monkeys coming in thinking, I know what I'm doing. Here's a flush of cash because I missed it on the first round, but now I'm sure it's a sell, so I'm going to sell. So now they're pumping it. They're pumping it. They're pumping it. What we're interested to do is saying, huh, I wonder if I can pitch this to my big boy and saying, hey man, I've got for you at this price 2 million orders. Do you want it? If you think the big boy wants that 2 million orders, how do you think he's going to respond? If he has 8 million orders to go and you bring him 2 million, will he say, screw it, I'll take it? Or will he say, no, man, I need more. I need more. I'm hungry. So I'm going to give you two scenarios. Okay, remember, this is 2025's last webinar. I want to make it powerful for you. Two situations can happen. And it's not a situation you need to memorize a pattern about. You need to memorize the logic. You have to memorize the logic, not the pattern, because a pattern will vary every time. So he might say, I need 8 million, and you're pitching to him, hey, buddy, I got 2 million right here fresh at 6,600. You want it? You want it? And he's like, no, man, I'm going to wait. I'll take a little bit, but I'm going to wait. What that does to him, what that does is this. Prices meander, 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 and then it comes down. When it comes down, what do you think the public is doing now? Smart money, people. Smart money. Intelligent money. Ooh, I know what I'm doing. Pumping, 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 pumping the cash more than ever before. Now the number has reached 6 million because people are now more sure it's a sell. Okay? You are now offering 6 million at this price, 65.80. Hey man, I got you 6 million at 65.80. I don't know if you're going to get more. What he's going to do is he's going to make a call and he's going to say, you know what? Do it. Take it. He will take the full 6 million and the remaining 2 million will look like this. So if you know he buys it, his response is going to be strong and saying, I'll take it all and give me as much as you can. I'll take it all, give me as much as you can. He will fill the whole 6 million, but there's still 2 million he wants to buy. And he'll say, can I take it this? Can I take this price? Can I take this price? Can I take this price? Can I take that price? The bidding begins. The bidding begins. Now, in this whole process, what you've done is you've trapped the seller. The seller who was thinking, smart money, I know what I'm doing. You were able to trap the seller. This being strong and stabilizing tells you the big boy is here. He must stabilize. Okay, he must stabilize, which means that the V formation, which is, let's say it's coming down, coming down, coming down. This is what we call the V formation. Let's say this is the last guy who started the down move. Okay, this is a word we're using from our Mastering Price section. All of you guys here know what's the guy who started it? GWS, baby. GWS. Right? You guys in here know GWS? Okay. If you guys know it, please put a thumbs up so I know how many of you guys are GWS people. Okay. So once that GWS, the guy who started it, gets taken out dramatically, that's when you know he's here. He's accepted the price from all the monkeys who were selling. He's accepted it. You already know you're not interested in the sells because you've seen the demand. You're like, oh my God, that's such a strong buyer. I'm not selling whatsoever. I'm buy mode, baby. I'm in the buy mode. I need to buy this thing, but I got to help him. This is you. Don't underestimate who you are. You have a very special role to play in this market if you know what that role is. Okay, you have a very special role to play. Okay, once this happens, what he's telling you is he's back, he's accepted all those prices, and now anything that comes back, he's going to fill up his remaining. And then if there's anything more left, all that's going to do is it's going to speed up this movement because there's nobody selling anymore. There's nobody selling anymore. All the sellers have quit. So now if all the sellers have quit, if you guys are the big boys, trader A or the player A, you guys are going to call all the vendors, which means your brokers. You're going to call them and you're going to say, listen, chums, I need as much as you can at 66.30 or 66.40. Give me that price as much as you can. And they're going to say, we're on it, sir. I can see a lot of stop losses placed in this area. If we can convert the stops into orders that you can take, imagine it's shares. Someone's selling to have to get rid of that shares, right? They have to trigger the stop loss to empty it. And when you empty those shares, it's available to buy again. Someone on the other side can buy it, right? If I have this glass and there's only one glass and there's two of us, you cannot buy it because I have it. But if I get rid of it because of a stop loss, it's back in the market, you can take it. Now it's available for you to take it. So that's when the movement begins to trigger the stop losses. Okay, that's when the movement begins to trigger the stop losses. When you trigger these stop losses, you know, all right, they're grabbing as many things as they can, and then they meander around this area before they launch. But how do you know it's a buy? It is not this, it is not this. You know it's a buy in this area already. You already know what you want to do in this whole zone. This tells you who you're trying to help. This tells you who's getting wrong-footed. This just gives you confirmation to get ready and to buy. Now, shall we reel it in and say, okay, well, how does this all connect to multiple time frame analysis? I'm going to give you guys a small shortcut. For all of you guys GWS Urban Forex fans as well, I'm going to give you guys a small shortcut. Ready? Okay, be very, very close on this thing. This is very important. All right, here we go. On that last move that comes down, this one, before it wipes them out, make sure when you go down a time frame, so let's say whatever this time frame is, let's say it's a 60, and then you go down a time frame and you look for this guy who started its movement till here, and you go down to a 15 or a 5, before your buy comes in, make sure this is subdivided. What that means is if you open it on a lower time frame, it mustn't look like this. It must look like this. So when that buy comes, he needs to look like, oh wow, the buyer overpowered the seller. No, it needs to look like this. The buyer murdered all the sellers. He chopped them up completely. Sellers cannot even breathe. He's destroyed him. That's when you can say, boom, that's him. He's here. He's strong. He's here to stay. Okay? That's the difference between this V formation and this V formation. A subtle nuance, when you look at it purely pattern, you won't notice it because it looks identical. But through your multiple time frame analysis, you can see the key details of how it was formed. So if I open up this 4 hours onto the 60, okay, let's first do this from the top here, okay? So we got movements. I know who I need to help. I got this strong red flow down. I got chasers, baby, chasers. Chasers, right? They're like, oh no, it's a sell. They're not selling this. They don't know to sell that. They will sell here, here, here. Okay? One or two might sell up there, but you know, I know, majority, all the sells are here. Because by the time they see it, they're like, oh no, I think this range is a probe. It's a probe. It's coming down. It's a probe. It's a faker. It's a pin bar. It's a hat. It's a pointy tail. It's something that, whatever they want to call it. So they sell down there. Not interested in the chasers. Let's get that smart money coming in. The ones who think they're very intelligent. So it slows down. Smart money is like, I got this. I'm not stupid like a chaser. I'm a smart guy. I'm a smart money. They sell. Again, some here, majority here as it's leaving because they missed the first one. So they already feel guilty, but this time they're not going to miss it. So they sell. Is it enough? Big boy says no, because the buys are not coming up hot. He's not interested. Okay. Consolidates. The longer it consolidates, the more the sellers are going to get antsy. They're going to get antsy, right? Antsy meaning they're going to get anxiety, like, oh, come on, come on. And then a small slip down, everybody's going to sell. Everybody's going to sell. More orders here because they're thinking they're catching the top. How many people in this room, myself included, have a disease of trying to catch the top? It's a disease. It has no logical explanation. It's just a disease. It just looks good. So let them try to catch the top because they're thinking they're going to catch it here and bring it all the way down to here. All right? So now we got a lot of sellers involved. Now I'm sitting here thinking, I've seen this look before. I know what time it is. NFP is coming up today. Lots of news events are coming up today. I just need to do some multi-time frame analysis check to see, what's up with this guy? Let me see this on one time frame lower. Down, pull back down, pull back down, pull back down, pull back down. Wow, it's very messy, right? One NFP news event comes out, one candle, done, 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 done. Everybody's out. Everybody's out. Okay, everybody's taken out of this picture. So now I want to see if he stabilizes. He hasn't yet. If he stabilizes and does some kind of move like this or like this, I'm expecting things to continue further because he's telling me what he wants. I'm not here guessing. I'm not here drawing lines. I'm not here doing that. I'm not here saying this and that. Let me origami this thing. Let me become semi-architect, semi-Picasso, semi-Michelangelo, semi-Leonardo da Vinci, and then a little bit of Fibonacci in there as well. Why do we need to do all that? Because how will that help us as traders who know what they need to do? How will it help us? The logic is missing in there. Does that make sense? Okay, so all of these things is now going to give you some idea on. Some of you guys were in the Q&A that we had before this webinar, 45 minutes prior to this webinar. And one of you guys asked me this question, which was a very nice question, is if you're already in a trade and you know NFP is coming, should you stay in the trade or should you exit the trade, see a big news event like the NFP release, and then re-enter the trade afterwards? I thought that was a very good question. And then my answer to that person was, if you're on a higher time frame, the news events will probably be in your favor. You can hold through it. If you're on a lower time frame, it's a different story. You might not survive. You'll have to play this on let the news release, see how it unfolds, what the information is, and you can decide to rejoin after if your thesis is still correct. Okay, so these are the two variations. Now, everything we've talked about so far, you tell me as of right now. Okay, we're not done yet. I have a lot of stuff to cover here. Now, you tell me as of right now. Where's my screen here? Okay. Is it difficult? Is it difficult? No, it's not difficult at all. Is it easy? With practice, yes. But are you going to get it tomorrow? Absolutely not. Absolutely not. It's not going to happen. But are you excited for what the future has? This I want to know. Are you excited of what the future holds for you when you get this type of information live unfolding in front of you on the biggest news events of many different types of news events? When you see all of these things there, you will start to understand, I need to understand the flow of things, the logic of things, but I need it to be explained to me in a way I can understand. You don't want this to be a mystery where I throw a big, thick textbook at you and saying, memorize everything in there. That's going to demotivate you, not motivate you, right? You want to understand this thing in as simple as possible. Warren Buffett and Einstein used to say, if you can't explain things simply, that means you don't understand it. Okay. And that's our mission at Urban Forex since the very beginning. We're trying to explain things as simple as possible so you guys can understand it. That's why we don't say, who's the people who move the market? Oh, hedge funds, bank, institution. It's so boring. I don't want to hear all that. You don't want to hear all that. Player A, player B. Who's player B? It's you. And then everybody else as player A, right? Keep it simple because we're trying to get to the bottom of the same answer. Keep it simple, something you can understand. So if some of you guys who are new, who do not have the background of it, we have a free course, in the, below this video, there's a link. There's a free foundational course that you can just attend, brush up on your skills, make sure 2025, you got 14 days left or 15 days left until the end of the year. Lock in that foundation perfectly. Lock in that foundation perfectly. I'm a little bit rough on my videos compared to these online ones. I'm more soft and gentle on these online ones, but on the videos that I do in our courses, I can be a little bit more direct and in your face. I hope you guys are okay with that, because when we study, when we try to do things, we're not there to waste time. We're not there to look pretty and all that stuff. We're there to get stuff done, right? Like time is money in this world, and we want to make sure that time is not wasted. This is why a lot of the stuff that we do, we condense the videos and make them small. So do yourself a favor for 2025. Register yourself for the free foundational course that's below this video. Change the way you look at the markets. And for those of you guys who are Urban Forex students, I hope you guys liked everything we talked about today. I hope it brushed up your skills. You learned a little bit more. You look at things with a little bit of your eyeballs of, can I play the investor as a player A, or shall I participate as a vendor, as player B? Both are fine. You need to understand which one you want to play. But as traders, generally, your job is player B. Okay, your job is player B. And if you understand the logic, then whatever pattern shifts and adjusts, you can accept. My name is Naveen Prithiani, and I hope I gave you everything that you need and made you curious for what beautiful 2026 can look like. So please make sure that you do the best for yourself and for your family. Pick up the free foundational course, study, and we're here to help you for whatever you need. Until next time, happy holidays, everyone. Bye for now.